now to Victoria Scholar. She's a market analyst at IG Group in London. Victoria, good to see you. Thank you very much indeed for joining us. What do you think is behind the story of all the red on the charts?
I mean, it's interesting to see the sharp moves that we're seeing, particularly on Wall Street. I know we've got this holiday coming up today, so it will be hard to see whether that continues into the rest of the week, at least until tomorrow. We saw the fourth biggest points decline in the Dow in its history. The S&P shed $800 billion worth of its value in a single session. I mean, there's a lot going on in the markets. You mentioned the trade tensions in your introduction there. Of course, there was that rapprochement at the beginning of the week between President Xi and President Trump, but that appears to have come to a rather abrupt ending when Trump said that he is a tariff man, and I think that really spooked the markets. Even Steven Mnuchin, the Treasury Secretary, said that the markets were pricing in concerns about a trade war.
Victoria, one analyst writing about the nosedive was suggesting that one of the factors here is algorithms, machines doing the business.
So that's the other thing that's been driving the markets right now. It's the move in the US Treasury curve. We've seen it invert. And when we see an inversion, that has been a precursor to a recession. Every recession since the Second World War, we saw the 5-year yield drop below the 3-year yield, and the 2-year and 10-year spread has narrowed to the lowest level since the Great Recession. And what is the thinking process here is that hedge funds have these algorithms, and they have automatic sell orders as soon as this yield curve moves to this inversion because of those concerns about a recession. So it could be a lot of these automatic triggering of seller orders that's sparked so much volatility in the last couple of days.
Very briefly, lots of analysts and journalists in the last couple of hours talking about these fears of a slowdown playing into the markets.
Absolutely. I mean, there are certainly concerns, particularly from China, about a possible slowdown, and across other parts of the world as well. If you think about Italy, it's got all sorts of political problems, let alone in the UK. We saw a gauge on its service sector, a PMI reading slumped to a very low level. I think it was the lowest level since 2016. And while the US economy is firing on all cylinders, the question really is how much more capacity has it got? How much longer can this go on for? And so that's why many economists saying there could be a US recession as soon as 2020, and what that will mean for global markets is quite concerning.
Victoria, good to see you. Thanks for joining us.
Thank you.